Hi traders, welcome to this live webinar. I wanted to check, first of all, if you can hear me properly and if you can see the screen properly. If you could be so kind to type a yes or Y in the chat box. So welcome to this live webinar. My name is Chris Sворcik from Elite Currency. And quick background about me, most of you know me here, but just in case you're later on looking at this is a live webinar, but we are going to upload it to the YouTube channel from ECS. So if you're looking at the recording, I've been in trading for more than 10 years, have developed a lot of methods in moving averages, wave patterns, and fibs, fractals. Those are tools I love. And you can check out some of my work on Elite Currency and see if that's something for you. This is about a automated solution, so not manual trading. And as you can see, Elite Currency is trying to work in that direction to build a bit more options and have more variety and a more wider portfolio for tackling forex trading specifically with automated trading systems. This is Zeus EA. This is the third one we've basically offered through Elite Currency. The first one is London Open Advanced, but that's something that not many know about. That was actually a few years already, but we never really, emphasized that too much, to be honest. But we're going to reopen that, by the way, just if I'm talking about it anyhow. We're going to offer that again, having some decent results for a long period of time, for years. So that's going to come up later on this year. And the second one, more famously, perhaps I do think so, is the Ultima EA. Certainly, a lot of traders have joined Ultima EA. And I'm sure some of you here have done that too. And this is the third EA. Zeus EA is the name. And we're going to talk about this EA in this webinar. So thank you all for that confirmation. Great stuff. Thank you for that. And feel free to use that same checkbox for any questions. Okay, so we're going to dive into the live results, backtesting, explaining the EA and how to join. It's going to be pretty straightforward, pretty simple webinar. We want to really get down to the key points. And then it's up to you. If you have any follow-up questions, of course, feel free to ask, sorry, and we'll get back to you either right away or maybe later on if I don't have that particular answer, and we could do a follow-up in an article. So just keep an eye on that as well. So first of all, with the live results, I'm going to show actually the live MyFX book results as well. But just to give you a snapshot of 3 of the accounts. Okay, so that could be useful to get an overview. As you can see, anywhere from plus 52 to plus 211%. This is as recent as it can get, I guess. Maybe on Friday I took these images, I think, or even today. So there shouldn't be any, much difference with the current accounts. Of course, if you look at this recording, a week later, obviously that could shift and it can change a bit. Obviously, we're trading as we go, of course, along, so that could change. But now it should be about the same. It has been developed by one of our Forex colleagues, and they approached us a while ago, and we gave the EA a try, and we like it. It's a bit different. I'll explain why later on than EAs that we've traded so far and other EAs that we're looking to create. But it's showing great success, and you can see that here. And yeah, now we're about to launch it. We think it's a significant, sufficient time of trading. And yeah, also we don't want to throw EAs out there every single week. We've been, of course, focused on Ultima EA, so it was another reason why we wanted to wait a little bit. So yeah, we think this is a good moment. It's Ultima EA is having a small drawdown or medium drawdown. I guess it depends on how you look at it. It's not intentional that we're launching this at the same moment. That is not intentional. Zeus EA is just a different type of EA. It's just meant to add a variety to the portfolio, which is why we'll be adding London Open events and also other EAs probably. Although after that, it's going to take a little bit of time to create the fourth one because we're still working on that in the background. All right, so let me show you those live FX book then. In this case, 1 second, let me close this for a second. No, sorry, I'm using the wrong buttons. 1 second, folks. Oh, great. Yeah, the fourth EAs are going to probably, yes, either the SWAT or CAMACD, indeed. Correct. Either one of those two. Maybe we'll launch it at the same time. Who knows? Let's see. There could be both the SWAT EA and the CAMAC EA at the same time. But this will take a little bit of time still. Okay, that's not coming. Let's say it's not going to be the next weeks at the very least. That's for sure. So probably more months. Matus is asking if there's anyone else having sound difficulties. Hope that you can hear me properly. Okay, at least Ali can. So thank you, Wendy, too. So yeah, let's take a look at those stats. This is the account with the best performance, plus on 211. Let's take a look at the equity curve first. So as you can see, pretty much a steady course. There are some drawdowns, but it's a pretty consistent kind of approach with regard to the performance. Let's take a look a little bit more at the other stats that you can see here. Profit factor is above 2. That is very high. Average win 6 versus about a little bit less than €9, 8.7. So the reward to risk ratio is about, it's a little bit about 0.66, probably a little bit higher, 0.68, I would guess, top of my head. And but a high profit factor. Profit factor shows how many times the gross profit exceeds the gross loss. So twice as much profit as the gross loss, basically. Very high win rate, 74 to 76 in this particular example. So you will see a lot of smaller wins, let's say, because you can see the reward to risk ratio. The average win is, as you can see, smaller than the average loss. But that said, you have a lot of wins. It is a intraday scalping, indeed, we will call it, indeed. Correct. That's something I'll explain as well later on. So here you can see that some months are better, some months are not that much profit, but the losses are not that big either. As you can see, there was 1 month with -1, and otherwise there are kind of smaller consistent gains, and then a bigger month with a bigger gain. So you will not see, as you can see, that many losses, losing months. So it's more consistent on a monthly basis from this point of view. Here you can see the same. Everything is above 0. And here as well. And this account is this third one is a little bit shorter track record. Let's take a look at some other stats. It's trading euro-dollar. Specifically, here you can see the hours. Daily is quite spread. As you can see, we're talking really about a very small percent chance that the account could even go into, levels below 20% drawdown. it's less than a % chance that it would get to more than 30. I mean, we're talking about almost statistically insignificant levels for 50% and lower. 40% is just so small. It's less than a tenth of a percent. 30% is less than a percent. 20% is 4%. And 10% is only 22.8. So very low chance. Very looking at these stats, very robust approach with low risk. From this perspective, the risk of losing sizable part of the trading account is small statistically here. Duration, anything up to typically a day, as you can see, with some exceptions, more than a day. All right, so those are the most important stats at this point. Here are the links if you wanted to check them out. Okay, I'll add those links in the webinar chat box. If I can, hang on. Something's not working. If you're looking at the recording, feel free to pause it at this moment to write those down. I have it finally. Those are the links, so you can access those anytime. For those who are in live webinar here. All right. Let's see. I'm just scrolling back to see some of the comments. Joel is asking different results for different accounts. This is June 11. This is April 2019. Let's see. This is, as far as I understand, this must be a lower risk strategy because the average win and average loss is smaller. So this is just with higher risk. The drawdown is also more, as you can see, 46, and here the drawdown is 13. So the gain versus drawdown ratio is probably about the same, as you can see. So this is just a little bit more risk. As you can see, the average, where is it? The average win, hang on. The average win versus the average loss, in both cases, are more than the average win, average loss here. So this is more of a lower risk approach, is a bit higher risk approach. That explains the results difference, okay? Let's see, anything else? This performance is, don't forget this 211 is about a year now. Started in June 2019. The risk percentage is, it doesn't work, as I will explain later on, it doesn't actually work with the same kind of risk type. It works with fixed lot sizes. Doesn't use risk as we manually do and manually trade, and like other EAs like Ultima and London Open Advance. So as you can see, let's take a look at lot sizes closed here. So what I meant with bigger risk is that just the average win and the average loss is higher in terms of the value. So you can see that there was more gained and lost than with the other account. That's the main way of seeing that. But it doesn't use traditional risk percentage. So it will use a standard kind of lot size. And if you use a little bit higher lot size, there's more potential for gains, but also more risk. But let me explain that why I talk. Let me continue so that I'll explain why in just a second. Okay. So here you can have a little bit better sense of those stats a little bit. High win percentage, lower reward to risk ratio. So it's really aiming more for smaller wins, but regularly, than a lower win percentage and higher wins. Let's say bigger wins. Still big wins, but it's more kind of like trying to get a stable equity curve to the upside, and trying to avoid these let's say bigger dips. We also did back testing. Here you can see that 2018. We don't go into. We did 2018 because we have live trade record from 2019. So I actually this might go even further than that. It was so many trades that I couldn't reach the end of the report. But so let me translate a bit about this because some might have difficulties with the language. But basically, this is the initial deposit. This is total net profit for 2018, maybe first part of 2019. As I said, I couldn't see the end of the report. It was so long. I was running out of time, but profit factor 1.55 in this backtest. There are tons of trades here, 7,442. So that gives a lot of data points. So there's no need to be scared that, based on a small set of data. No, there's a lot of data in this. 99.9% modeling accuracy. And here we see relative drawdown and maximal drawdown. So that is really, really low. It's below 10%. And that's, my FX book shows that too, the percent, the chance of losing more than 10 or 20% is small. And below that is basically statistically insignificant. That doesn't mean it's zero, but yeah, it's, as you can see, very low in the case. What else? Consecutive losses, consecutive wins, 22 versus 11, and the win percentage here hanging around the 71%. I think those are the most interesting stats as far as I can see. Let me check if there are any questions on that, actually. Yeah, indeed, Ali, correct. It's more steady, slow kind of growth with monthly profits in most cases. So in general, we expect some kind of cash flow out of it on a monthly basis. In most cases, indeed, and not so much like this. This is account growing fivefold in 2 months or something like that. Indeed, but it does add up. As you can see, to more than 200%. But it's a little bit different, differently divided. Now, there was 1 month that offered, typically there's a month that offers more results than others, as you can see. But the risk or the chance, let me say this way, of a negative month is relatively quite low. It did happen a couple of times, but not that often. So this is a backtesting done for. Oh, here we have the date actually. I didn't notice that before. My apologies. Actually, I was trying to look through the whole report, but no wonder it took that long to download, because it's actually it is actually more than 2018. It's a 2.5 year report, probably with a lower lot size approach, because in this case 46% probably with less risk, I would say. 5-minute charts, let's dive into that. So the whole idea is based on mathematics. So this is a different type of VA than Dennis and I are used to. Is a different type of approach than our manual trading, and this is something that I would never do manually, and I don't think one probably should do that manually, because it is way too many trades to handle manually. This is something that only an EK can do. Very simple, very straightforward. This is not something that manual traders want to do that, or can do that. Really, be honest, okay? Because it doesn't lose your stop loss. So that's why I said this is something that we would never do manually, or could do manually. It's based on math and not so much on technicals. There is some technicals in the sense that the RSI is used for finding U-turns. But otherwise, it's a math approach with a tight trade management, no stop loss, and that's why you see a lot of smaller gains because of that tight trade management. Only the euro dollar, so there are low costs relatively on that pair. Although even with later on, I'll explain. Even if you do trade it with a 2.5 pip spread, it works fine. But the euro dollar, in any case, is the most. It's a pair obviously that is easiest to trade in many ways. Well, let me say this way. I have to be precise with my words. I meant like there's plenty of liquidity. It's the most traded asset in the world. So there's a lot of advantages of trading euro dollar. There's never going to be a shortage. There's never going to be a problem with entering and exiting. There are many advantages from that point of view with the euro dollar. It's fully 100% automated. It's a 5-minute chart, and we consider it kind of an intraday scalping because there are going to be quite a lot of trades in and out. So these are the main features and characteristics of this particular EA. Euro dollar 5-minute chart, intraday scalping, fully automated, 100%, entries and exits, management as well, nothing manually to be done, based on math, plus RSI. That's the strategy, okay? That's the bare bone of it here, and you can see example, lot sizes, TPs, no stop loss, and as you can see here, these 3 positions are aiming for a take profit in this spot. So it's a different approach than, and because of the volume and the complexity, it's only something that can be done by an EA and by an automated system. All right, so live track record, backtesting as well. It's automated. Nothing that traders have to do manually. And as you can see, a pretty steady curve. Some drawdown, of course, yes, but pretty much a steady curve with a monthly, usually a positive monthly expectancy. Now, there are 2 options, basically. There's a rental option for 1 year with your own broker. It's more expensive, though. Or a lifetime option, but it's connected to the broker of our choice, which is Key2 Markets, which is the same broker we've been using recently as well. And so then it's a lifetime option. So you don't. It's a one-time payment instead of a yearly payment, and it's cheaper as well. Now you might wonder why. Okay, so the reason is that there is a decent volume, and because of the expectancy of this EA to continue trading as it does, it should be a good chance that volume is recurring. So that there's a profit made on that as well, which is why we can offer a lower price on that. Okay, and some of that will go to cover costs on support and marketing, etc. Okay. So that's the difference. That's the reason why, because you are choosing to go through ECS and our recommended broker, Key2 Markets. Okay, so, but you have the choice. If you don't like that, you could, of course, always go for your own rental instead. Good news is that in any case, there's a 15% discount with the code ZeusEA15. That's valid for both options. And if you want more info, here's the page, eliteCurrency.com/forex-CFD/ZeusEA, Zeus, Zeus, how do you call this? This minus sign. I forgot. You know what I mean, EA. So eliteCurrency.com/forex-CFD, ZeusEA. And that's how you can start. It's as simple basically as, where's the steps? I had the steps somewhere. Here. Yes. Opening up for your broker, purchasing ZeusEA, and then putting it on your MT4. Recommended minimum account size. This is important information. It's 2,500 because of the math behind it. This is the minimum recommended. So that is important information because not everyone starts EAs with that particular amount. Some, there are a decent amount of traders that start with less, so that's something to note. And it uses MT4. That's also important information. Yeah, no. Today, Nenet is going to have a recording instead. So you got to check out the YouTube, please, on ECS, and it's going to be uploaded there today. Just because of this webinar, it was not on purpose. Actually, it was by accident that we planned it at the same time. So we didn't want to, cause any confusion there. But it's going to be uploaded hopefully soon. So sorry for that, by the way. Yeah, that's true, Joe. Indeed, you don't have to, I mean, it's not necessary to withdraw. You can just let it grow too, but it will be just with less volatility overall. That's also true. Minus sign. Okay, yes, indeed. So that's it. elitecurrency.com/forex minus sign CFD /Zeus EA Zeus minus sign EA. Any other questions, by the way? So feel free to do that now. This is what I wanted to present. Let's see. That's a good question, Joe. It's not something I'm sure about myself. I need to double check that. Let me ask Nenad. Not sure if he's available at the moment. Worst case, I add that question in the article as I mentioned. Okay, let me ask. I'm not sure if he's online though. Any other questions? Let's see. Let me check the. Hang on, folks. I'm answering, just checking. As far as I can see, the backtesting did use a similar spread. I'm not sure exactly 100% what spread K2 markets will be using. So I don't want to send any false information here. So let me double check that particular spread. Okay. And I will get back to you on that. So that's something that I will re-answer or get back to in the article. Okay, so the question is, for those that don't see the questions actually from the YouTube webinar recording, what regarding the spread, basically through any broker, but specifically K2 markets for those that are specifically going through K2 markets. But if you use other broker who has a spread of 2, how does that impact the profit? Okay, the lot size is 0.01. It's a micro, regardless of the deposit, basically. Okay, so that's the lot size. Always a micro. Any other questions? I hope that I have to next time we have to have a way for two speakers at the same time. It would be great to have Nenad on the call as well at the same time. But I have no idea how that works, so we have to figure that out one day. I will ask about that, Joe. I'm not sure. I'm not sure if that would be possible, but let me talk to everyone involved, Nenad, and our strategy partner, and see if we can. So I'll add that as a note. Yes, okay, I understand. So I'll get back to you in that article, so keep an eye on that. And what was the other question? Ivan is saying I had a bigger amount, but the lot size were the same. Hang on. I think it's... Let me double check that. Yes, it's the same. It doesn't matter if you are trading with even 4 times that amount, 10K or even 20K. Now that's saying that I should wait for a second and let him confirm, but so let's wait for that. But so I'll still double confirm that. Let me see if there are any other questions. Okay, with the back testing, 1,000 out of 2,500 was the max loss, so that's about 40%. In live trading, there was a drawdown once seen of max 1,700 as a very max. But we can see that from the MyFX book stats that the current performance doesn't see that as a very high chance. That's about 4 years. So it's quite a long period of time or a very long period of time for a 5-minute chart. All right, and that's why we recommend as minimum 2.5K, 2,500 to make it through any drawdown with that 1 micro standard lot size. Let's see. So let me double check. Yes, Joe, that was an answer to you indeed, correct? And also to Ivan, by the way. But still waiting for double confirmation on that. Yeah, RSI is used for U-turns, but I will still get back to Jules' question. We are thinking actually just about in the near future about just making one webinar on EAs in general. rather than having separate EAs like that. Maybe starting with from August, so that we just finish the current ones, current Ultimate EA webinars, but just put it all together. It's not like we had tons of questions, so I think we can combine that, to be honest. But let's see. Maybe I'm wrong. I just want to test a few more Ultimate EA webinars. But if the flow of the webinar seems to be just a few questions, I think we could just put it all in one webinar. So I'm assuming it will start with like just a general EA webinar from August. No, BAPS, it does not use a stop loss. So this is something that, as I said, with manual trading or other EAs, we don't do. And this is specific for only this EA, uses a small lot size, as you can see, and risks small, basically, with small positions and small targets, and a lot of trades aiming for small profits. Joe, the lot size is the same, so you wouldn't need any help with that. You could always count on Keto Markets to help you, though. In general, they're very, very fast, very customer friendly. So I think that if there's anything that is not sure or not clear, they always gladly help. That's for sure. But okay. Okay, so Nennet is answering me. He talked to the strategy partner, and yeah, on 20K, for instance, it could go up to 3 micros, 0.03 lot sizes. That's 20,000 though. So yeah, I'm not sure if anyone is here wanting to risk with 20,000 or more, but then you could. The expected return in that case 5,000 to 7,000, and the same with the drawdown. And for 15,000 and higher, we might consider using 2 micros, adjusting the lot size a little bit. Okay. With 1 micro, the historic returns are 3 to 15% per month. 3 to 15%. So you would have to, as with 2,500 as a minimum, we recommend. So you have to go up at least to 15,000, or maybe even 15 to 20,000 before you can increase the lot sizes and expect more. So with 20K, you could expect 5 to 7K with the same drawdown on a yearly basis, basically. Okay, and if you have anything between 2.5 and 15K, if you trade with that, of course, I haven't mentioned it yet, but always trade with risk capital you can afford to lose. That is valid for any EA and any trading system. And this is always a high risk approach, of course. All right, but anything between 2.5 and 15K high, risk capital, the historic returns anything between 3 and 15% per month on average. The percent might be a little bit lower, of course, if you do 10K, right? Might be a little bit higher if you do 2.5K, because ultimately it uses the same lot size, right? So the percent will be lower with higher capital. Okay, in that case, Ivan, I would recommend to send an email. I'm not sure if you use your own broker or if you use Keto Markets. But if that's the case and you feel comfortable with the higher risk or the higher lot size, then maybe best to send an email. I'm not sure to whom. send us an email at info@ and key to markets if you're using that broker. Okay. Yeah. Because then, then you should be able to, if you want to, you should be able to do that then. Let's see. Let's see. Joel is confirming key to markets. Great stuff. Great to hear that. And key to markets has good reviews as well on ForexP's Hermie, and that is not something you see often. So I think it shows definitely something. And let's see what else. It's once you install the MT4, it's just an easy drag and dropping. And that's it. That's from Joe. Joe. The drawdown, yeah. Well, you see the drawdown. Let me double check. I think that this is probably with the, let's see, this is maybe with the higher lot size, and this could be with the lower lot size. Looking at the amounts won and lost as well. So, but yeah, the drawdown can always be bigger than what we see here because it has been traded for years, and it could be anything between $1,000 and $1,700 out of 2,500. So, these back tests or these live trading results are a little bit smaller. So don't take it just as this, this percentage as is. It can be a bit more, so just be aware of that. That's why the recommended minimum is 2.5K, so that any larger drawdowns are also survived. So that's why the minimum is 2.5K, 2,500. I think that's and with 20 or 15 to 20, you might think about other lot sizes. Yeah, exactly, Joe. So with the one lot size, it seems to be about 1,700 to about 2,400 in a year, basically. Let me quickly confirm the math for you. 1 second. This is the expectation once again. About 1,600 indeed in a year to about 2,300. Okay, out of a capital of 2,500. With a drawdown about 1,000 to 1,700. That's plus minus what is expected. Of course, you know how trading is, but we never know for sure. But that's the expectancy, and that can go up to 5 to 7K with the same type of drawdown plus minus, with the 20,000 if you're starting with higher capital. All right, I got the answer about the spread. The spread on key to markets is 2.3 pips, but as long as it's below 3 pips, it should not affect the profitability. All right, so if you're looking for a broker out there, as long as it's below 3 pips, it should be fine. If it's above 3 pips, then you might want to rethink it and maybe choose a different broker. It could affect the profitability if it's above 3 pips. All right. So, but if you're from a country where you cannot open an account with Key2 Markets, of course, well then that is not an option. If you have an option to open an account with Key2 Markets, you would save a lot on the purchasing price, unless you have a a broker with very low spread that you trust. Then you might still want to think about the yearly rental because of that. Right. But on the flip side, okay, you pay a little bit more for this spread with Key2 Markets via this EA, but you pay only one-time lifetime payment. So that is your choice. All right, I guess that's it. Let me see if yeah, that's 0.03. We can see that the difference also in the average loss and average win. As far as I remember, it was about 0. Let me check. 629 here, and here it is 2 versus 4. So yeah, it's about a third, as you can see, plus minus. All right, so I hope I'm clear. If there is a 15% discount, Zeus EA 15. Let me double check. It's valid until the official Zeus EA launch, but I'm not sure when the Zeus EA launches. So let me try to double confirm that, but definitely, of course, I guess this week. I don't think that's for sure. It's not recommended. I'm not sure how. That's a good question, Joel. I mean, I see here recommended 15K before thinking about increasing 20K with 0.3. So it's at the very minimum not recommended. What kind of capital are you thinking about? I can ask that specifically, so that it's maybe more. My answer is a bit more precise. No, in that case, certainly not so, because actually the minimum recommended is 2,500. Because of the potential 1,000 to 1,700 drawdown. So it would be better to not increase this. Definitely not increase the lot size with that account. In fact, you might want to. It would be best if you could add some capital to that amount so that you have or reach the minimum. No, with 2.5 to 3,000, also not. No, then in that case, the minimum account size is recommended. You would really probably have. I mean, what I read here is 15,000 before thinking about the next step. I don't know how hard that or how tough that border is between 15 and 20. You know, if you have 10K, would it be possible to do 2 micros, or if you have 5K, would it be I'm not 100% sure. I would have to double check that. If there's anyone who'd be interested in that, let me know. I can check it out. But it seems to be 15, 20K. So I guess no other questions. That's great. So another EA, excited about that. Added to the options, and a third one coming very quickly, and we're working on a fourth and fifth. So hopefully we'll have a very nice all-around portfolio with different kind of types, approaches. The fourth and fifth one will take some time, by the way. But this is our third one in a way, right? Because London Open Advanced was already available in the past, but it's going to be re-offered again. So that's exciting. It's a new direction in a certain way, relatively new direction. But I mean, from my perspective, I really, really appreciate trading automatically more than ever. And although I still am very fond of manual trading, there's a lot of upsides to automated trading. And yeah, it's interesting how things develop. It's something I thought about a few years ago, and look where we are now. So I'm excited about that. I'm just waiting for a confirmation when this discount code is valid. Yes, the other one is London Open Advance, correct? All right. The discount code is actually valid to the end of tomorrow, 14th of July. Okay, so that's basically one more day and 6 hours or so, or 12 hours. I mean, if you're in the US, to the end of tomorrow, basically. Okay. Okay, this was actually a misunderstanding from my side. It was actually a hidden promo, and I misunderstood. This was actually a promo for before the launch, and we actually launched now. So I misunderstood. So anyhow, that's good for you, because there's extra 36 hours to potentially gain this discount. Okay, so you get an extra extension there. Otherwise, if you're too late for this 50% discount, I hope it's not a big thing. It's a small little discount, so I don't think in the end it matters that much. So check it out. I guess that wraps it up. Thanks for being here. I don't see any additional questions. We'll recheck the chat and address anything unaddressed in the article. And wish you all good trading. Okay? Cheers. Bye-bye.